Welcome to the deep dive. Today, we're digging into something pretty wild. We're looking at U.S. crypto adoption in 2025 and asking a big question. How did a dog-themed joke, Solana's BONK, actually grow up and become an asset serious enough for Wall Street?
It's an incredible story.
Okay, so let's just unpack this. The whole idea of crypto being, this niche thing for speculators is just gone. We're in a completely new phase. It feels like a mass market moment.
We absolutely are. Our sources paint this picture of undeniable mainstream integration. I mean, the headline finding from the 2025 adoption reports is it's staggering.
Staggering how?
Cryptocurrency ownership in the U.S. has nearly doubled.
Doubled. Since when?
Since the end of 2021. We're now standing at approximately 28% of American adults.
28%. Wow. So what's the raw number on that?
That's about 65 million people. And maybe even more important for the long run, 2 out of 3 American adults now say they're familiar with crypto.
That's the real tipping point, isn't it? That familiarity, the psychological hurdle is kind of gone. So you might be asking, if adoption is that high, what's driving this huge wave of new money? And where is it all going?
Well, the intent is overwhelmingly bullish. Our sources are showing 2 out of 3 current crypto owners. That's a huge 67%. They plan to buy even more this year.
And what about people who aren't in yet?
So 14% of non-owners, they're planning to jump in for the first time in 2025. And another 48% say they're open to it. That is a deep, deep pool of potential capital.
So which coins are actually catching their eye? I assume Bitcoin is still the main entry point, but is the average person looking at established names, or are they chasing those, rapid gains?
Bitcoin is definitely still the anchor. Among people planning to buy this year, 66% want BTC. Ethereum is next, a solid 43%. And this might surprise some people, Dogecoin comes in third.
Dogecoin, at what percentage?
At 24%.
24% for Dogecoin. That's way higher than most other altcoins. What does that tell us about the kind of people getting into the market now?
I think it suggests a mix. But the appeal of Bitcoin, especially for that 66%, is fundamentally different. The sources really confirm the rationale there.
Right. It's about security and scarcity.
Exactly. Confidence in Bitcoin is tied to its status as, digital scarcity. It has the most secure blockchain, all that real-world electricity invested in it, and that definitive cap. 21 million tokens by 2140. It's seen as the reliable store of value.
That concept is pretty much cemented now. But confidence isn't just about the market anymore. It's also tied up with DC. And this is where the political landscape gets really interesting.
It really does.
I mean, isn't there a risk in tying a decentralized asset to a single administration? It feels kind of counter to the whole philosophy.
That's the tension right at the heart of it. But the market sentiment, what the data is capturing, is just one of political optimism. 60% of adults who are familiar with crypto, they believe its value will increase during the new Trump administration.
And again, we're just reporting what the sources say here.
Correct. And nearly half, 46%, believe the new administration will actively boost mainstream adoption in the U.S.
And this isn't just a feeling, right? It's tied to actual proposals.
Precisely. The sources point to specific campaign vows, like the promise to set up a national strategic Bitcoin reserve, and crucially, to stop the government from selling off any seized Bitcoin.
Which would have flooded the market in the past.
Exactly. It signals a move away from that regulatory uncertainty that really plagued the market for years.
And all of this is building on an already strong foundation from 2024. Those milestones were huge for legitimizing the whole asset class.
Absolutely. The structural shifts were key. You had the Bitcoin halving in April 2024, which automatically tightened supply. But the regulatory stuff was arguably even bigger.
The ETFs.
The ETFs. The SEC approval of a Bitcoin ETF in January, and then the follow-up with an Ether ETF in July. Those two events, they didn't just open the gates for Wall Street. They basically formalized crypto as an asset class.
And that legitimacy is showing up in people's portfolios. Current owners are doing well, right?
Overwhelmingly, 69% reported net gain. And you're seeing industry experts echo this with some really aggressive price targets, thinking Bitcoin could hit, $150,000, maybe even $200,000 in 2025. It's a sustained bull run.
Okay, so let's shift from that broad optimism to a super specific case study that really defines this era. BONK. It starts as a joke, but it evolves into something much more.
Yeah, BONK's origin is rooted in trauma, really. The trauma of the Solana ecosystem. It launched late 2022, right after FTX imploded.
And FTX is deeply tied to Solana.
Deeply. The whole ecosystem was in a free fall. SL's price was like below $10. BONK was basically a morale booster for the community.
Just to rally the developers and users who stuck around. So what made it different from, the hundreds of other meme tokens that pop up and die?
Two things right away. First, the ideology. It was a genuinely fair launch.
Yeah.
50% of the entire 100 trillion token supply was just airdropped, given directly to the Solana community.
And that was a statement.
A huge statement. It was to counter what they called predatory VC tokenomics, meaning no big allocations to institutional investors who might just dump the tokens later and kill the project.
So that's the cultural edge. What about the tech? How does being on Solana give it an advantage over, say, a competitor on Ethereum?
Solana's architecture is everything here. It gives you massive throughput, up to 50,000 transactions per second, and critically, these ultra-low transaction fees. We're talking less than a penny.
Which makes it actually usable.
Right. It makes BONK practical for microtransactions, for being integrated into the ecosystem in a way that's just too slow or way too expensive for Ethereum-based coins.
And this leads to my favorite story from the sources, this idea of hardware-driven tokenomics. It's incredible. Tell us the Solana Saga phone story again.
It is the ultimate arbitrage play. So the Solana Saga was this premium phone, but it was struggling to sell at its, $599 price point. But it came bundled with 30 million BONK tokens as an incentive. Then the price of BONK just exploded, so much so that the value of the free tokens became more than the cost of the phone itself.
So you weren't buying a phone, you were buying subsidized crypto with a free phone attached.
Exactly. It caused this total panic sellout. People were flipping the phones on eBay for up to $5,000 just for the crypto inside. It proved a digital asset could drive sales of physical hardware.
And they're repeating that formula now.
They are. It's the whole blueprint for the new device, the Solana Seeker, which launched with over 150,000 pre-orders.
That's an amazing path from meme to genuine utility. But beyond hardware, how is BONK building longevity? Are there unique deflationary mechanics?
Yeah, it's really moving from a joke to what you'd call an ecosystem asset. It's integrated into more than 400 dApps on Solana. The model is this fee-driven burn plus cultural stickiness.
Okay, tell us about the burn mechanism. That's what creates the deflationary pressure, right?
It is. Our sources confirm that over 65% of the original supply has been taken out of circulation. That's massive. And it happens through these big events like the Burn Miz initiative in late 2024.
Burn Miz?
Yeah. The community burned 1.69 trillion tokens, and it's often tied to usage fees within dApps. So the more the ecosystem is used, the more tokens get burned. It incentivizes long-term value.
And it's expanding into new areas.
Big sectors, like fitness, with the Moonwalk app that rewards you for running, and also the BONK Arena gaming protocol.
So what does this all mean? The fact that a dog-themed joke coin has matured enough to get its own institutional financial products, that's the ultimate sign of memes meeting Wall Street.
That convergence is validated by SEC filings. We are now seeing formal financial instruments focused on BONK, right alongside established assets like Litecoin and SUI. You've got the Osprey BONK Trust, but the big news is the filing for things like the Total Capital BONK Income Blast ETF.
An ETF for a meme coin. That's a watershed moment. So let's break down these Income Blast ETFs because the mechanics sound complicated. What's the core function?
The structure is complex. Yeah, because the asset itself doesn't pay a dividend. So the goal of these ETFs, and they exist for BONK, Litecoin, and SUI, is twofold. They seek current income plus exposure to the crypto's daily performance. But, and this is key, it's subject to a gain limit.
Okay, so how do they generate income if the crypto doesn't yield anything?
They use a pretty sophisticated derivative strategy. It's called a structured options overlay, basically a systematic put spread strategy.
In simple terms?
In simple terms, they get long exposure to the asset, so they hold it, while at the same time selling options premiums to generate income. They are literally creating yield out of volatility.
That sounds complex from a regulatory standpoint.
Yeah.
And the sources mention this big hurdle, right? The need to use a Cayman subsidiary to meet U.S. source of income rules. Why is that offshore bit necessary?
This is a critical piece of financial plumbing most people miss. So regulated investment companies, or RICs, like these ETFs, they have to get at least 90% of their gross income from U.S. sourced activities. It's for tax reasons.
And dealing in crypto doesn't count.
Often not, under current IRS guidance. So things like staking or trading futures, it doesn't qualify. Therefore, they use a Cayman subsidiary, an offshore entity, to do the direct crypto investing. That subsidiary then pays its profits back to the U.S. ETF as a dividend.
And the dividend does qualify.
The dividend qualifies as U.S. source income. It allows the fund to meet the 90% test and stay tax efficient for investors.
That is incredible. The U.S. tax code is forcing Wall Street to go offshore just to package these assets. And if we put BONK next to its two big dogcoin predecessors, Dogecoin and Shiba Inu, the model is completely different.
Totally different. Dogecoin is from 2013. It's inflationary proof of work focused on payments. BONK is 2022. On Solana, it's deflationary because of the burn, focused on gaming and utility with those super low fees. And institutional confidence is there. I mean, NASDAQ-listed Safety Shot made a $25 million investment in BONK in August 2025.
That is undeniable legitimacy. But you, the listener, you need the full picture here. For all this excitement, the sources show some deep, persistent security concerns across the whole asset class. We have to talk about the risks.
The skepticism is significant, and it's a necessary counterpoint. Despite the high adoption, 59% of people familiar with crypto are not confident in its security. And it's not just outsiders.
What do you mean?
A crucial 40% of people who already own crypto are also not confident that the tech is secure.
That internal fear, that suggests real practical problems, not just abstract doubts. What are the day-to-day issues people are actually facing?
They're very real. The data shows 1 in 5 current owners have had trouble withdrawing funds from a platform. And while non-owners worry about value swings, current owners are uniquely worried about security. 36% of them fear cyber attacks or just losing access to their wallets.
And when we drill down to meme coins specifically, the institutional filings, the very documents for these ETFs, they highlight the risks in bright, flashing letters. What are the key warnings?
They are explicit. Number 1 is extreme volatility. These prices are driven by sentiment, by hype, by social media narratives, not fundamentals. Drawdowns of 50 to 70% are common.
So you have to be ready for that.
You do. They are also super vulnerable to manipulation. The risk of pump and dump schemes is high, and large holders, or whales, can move prices. And then there's the technical risk. BONK depends on Solana's uptime. Now it's expanding. It's on 13 blockchains now. But Solana's history with outages is still a background risk.
So for you, the listener who's maybe excited by all this, the safety advice from the sources is absolutely essential. You have to manage that excitement.
The professional advice is clear. Be super vigilant about fake airdrop sites. They're everywhere and they exist to drain your wallet. And remember that the volatility is brutal. The most critical piece of advice is to set an exit plan early. Know when and how you'll take profits before the hype shifts.
That is powerful advice. So we've seen this mass wave of adoption. It's driven by performance, accelerated by political tailwinds and SEC approvals. We have financial instruments, like these ETFs, giving legitimacy to assets that literally began as jokes.
The synthesis is that crypto's value proposition has matured. It's gone from a fringe idea to a robust financial platform. But, and it's a huge but, the core risks are still fiercely tied to volatility and security. It just underscores the absolute need for critical thinking and risk management.
It's an era where financial innovation means navigating Cayman Island tax law just to sell options on a dog token. So here's a final provocative thought for you to mull over. Despite SEC-registered funds now tracking assets like BONK, the very definition of a successful token, from Bitcoin's hard scarcity to BONK's hardware arbitrage, is that its survival depends on speed, cultural adaptation, and deflationary pressure. So if the Lindy effect is the key to longevity, what new cultural meme, built on what faster infrastructure, is going to break through that $3.096 trillion market cap next? That's our deep dive for today. We'll see you next time.